I have friends, advisors, and business associates who say I should not tell you this. But this information is important, and I think you should know it. My name is Robert Kiyosaki. I am fourth-generation Japanese American, born and raised in Hawaii. My mother was a registered nurse, and my father had a PhD in education. He was also the superintendent of education for the state of Hawaii. What broke my heart was that although my mother and father had a great marriage, the only time they ever fought was about a subject called money. In 1970, at the age of 50, my dad was downsized. He never recovered from it. I swore my life would be different. So in school today, we're focused on a thing called SAT, or Scholastic Aptitude Testing. We want to find out how good you are at reading, writing, arithmetic. Very important skills. And depending on how well you do with SAT, the next thing they focus on is professional aptitude testing, whether you should be a doctor, a lawyer, fire chief, secretary, or whatever. It's your professional training. But what school fails to focus on or train people on is a thing what I call financial intelligence. We never discuss the subject of money in schools. So what do I mean by financial intelligence? Well, if we gave $10,000 to 100 people, 80 of them, or 80%, would have nothing left at the end of a year. 16% with the same $10,000 might have $10,050, what you would get by putting it in a bank. And 4%, given that same $10,000, would have anywhere from $20,000 to $1 million or more. And that's what I mean by financial intelligence. So when we go to school, we learn to read these things, but we never learn to read these, financial statements or annual reports. We never learn financial literacy in school.
I founded a company called Prime Cable in 1979 with two other people. Today, that company, if it were sold, would sell for about $1,600,000,000. I'm a graduate of the University of Texas. I got an MBA in finance. For the last 8 or 10 years, I've been a turnaround specialist. So companies will call me and ask me to help them fix their problems. One of the unfortunate things about being a turnaround specialist is that sometimes there's some fat in the organization that has to get eliminated, and so in the last 3 years I have fired probably well over 200 people. Most people that I know haven't bothered or figured out a way to go learn the rules so that they will spend the time and understand how to go make money with money. And that's what cash flow is about. It's learning the rules of the game on how to make money with money. One of the great things about money and the rules of the game for money is that they can be taught and they can be learned. One of the things that is very important to me is that my children especially understand the rules of the game of money so that they will never be one of the unfortunate statistics who gets fired in a corporate downsizing by somebody just like me.
When I studied accounting in school, it was possibly the single most boring subject I ever studied. So I had to create a system that was easy enough for me to understand. So these are the basic forms necessary for financial intelligence. One is called an income statement because it has an income and expense, also called a profit and loss statement. There is also a balance sheet, and the balance sheet has assets and liabilities. And these are the very basics for financial literacy or financial intelligence. I soon realized the main cause of financial struggle was due to confusion between the definitions of an asset and a liability. I looked in the dictionary at the definitions of assets or liability, and I got very confused by the dictionary's definition, so I made up my own. My definition of an asset is something that puts money in my pocket, and my definition of a liability is something that takes money out of my pocket. So what caused my mom and dad to struggle financially is my dad, because his banker and his accountant and his real estate agent told him a house is an asset, by this definition, it's actually a liability. He also counted his car as an asset. Yet by this definition, his car was not an asset, it was really a liability. And if these definitions are still too confusing, I simplify it even further. The new definitions are, if I stop working, assets will feed me, and a liability will eat me. And I hope that's simple enough. So the most important thing about being financially literate, or the ability to read numbers, is understanding a thing called cash flow. I can tell the difference between a poor person and a middle-class person by simply looking at their income statements and balance sheets and figuring out which direction the cash is flowing. So I will show you the cash flow pattern of a poor person. Generally, a poor person, all they have is a job. The income comes in from the job, goes down, they pay their rent, clothing, a little food, and goes out the expense column. And this is a cash flow pattern of a poor person. The cash flow pattern of a classic middle-class person is a little bit different. Income comes in this way, but with a middle class, they probably have a mortgage, they probably have car payments, they probably have credit card payments. It comes up again through the expense column and then out this way. So what you see here are the cash flow patterns of a poor person versus a middle-class person. So the cash flow pattern of the rich is different. The cash flow pattern of the rich flows from the asset column into the income column. So while the poor and the middle class are focusing on income, what the rich are focusing on is the asset column. And the asset column is the great secret of the rich. So for those of us who weren't born rich and what we have is a job, every time money comes in, this is the point of choice. This is where you make the decision to be rich, poor, middle class. If when this dollar comes in and you take the dollar out this way, then it's your decision. If you go and buy yourself a new t-shirt, cappuccino, a new lunch, then you're choosing to expense it right out. You're choosing to be a poor person. If instead, when you get a pay raise or more money, what you do is you go and buy a bigger house, a new car, or you take a vacation on your credit card, then what you are choosing to do then is to be a middle class person. And if you choose, instead, when the money comes in and you choose to put it in the asset column, then you make that decision to be rich, poor, middle class. By putting in the asset column, at this point, you're choosing to be a rich person. But the choice is up to you, nobody else. Earlier in this tape, you met Keith Cunningham. And Keith told me a story about when he was in graduate school for his MBA. A gentleman named Ray Kroc, who was the founder of McDonald's, came to speak to the class, the MBA class, and asked the class, he said, "Ladies and gentlemen, what business am I in?" And the whole class just cracked up. And they said, "Well, Ray, of course we know what business you're in. Your business is hamburgers." And Ray said, "No, my business is not hamburgers. My business is real estate." So what Ray was saying was that his profession was in sales. He basically sold hamburgers. But his business was down here. His business was real estate. So when I ask most people, what business are you in? Let's say I ask a banker. They say, "Oh, I'm in the business of banking." So no, your profession is banking. Or I ask a doctor, "What business are you in?" They say, "I'm a doctor." And what the mistake they made is their profession is being a doctor. So your profession is you working for money. And what your business is your money working for you. And the main reason so many people struggle financially is they're not minding their own business. They're minding somebody else's business. So looking at this chart one more time is over here in your profession or your job or being an employee, you're working for somebody else. You're working for the shareholders. Over here, the first person you're working for is the tax department. Here you work for the government. And over here, if you own a house, you're working for the bank because you got a mortgage. So if you want to be rich, happy, and successful, you've got to mind your own business and not work for everybody else.
Corporate America is very exciting for someone in my position. I'm single, a woman, and doing very well, and I'm very happy with my job, but it takes very long hours and hard work to be successful in corporate America. Cash flow helped me realize that I was spending a lot of time making other people rich, and that I was stuck in a rat race. So, and learned ways that I could get out of that rat race. And it was great experience for me, a learning experience for me.
My name is Jeff Bassett. I'm an investment broker, and I'm 25 years old. I have a degree in economics and was trained on Wall Street.